All right, great. I see that it's fixed. Let's get started with the session. Welcome again, everyone, to the AutoUFOs Vitamin T series, where we're covering very specific topics and staying focused in important topics to grow and improve in our trading. Today is going to be about trading methodology. And again, in order to keep everything flowing nicely, if you have any questions, make sure you type while we are having the session, and I will get to it either during the session or toward the end of it. Let me go through the disclaimers here. The following videos, clips, and demonstrations are for educational purposes and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Alrighty, let's get started. My name is Brian Bonatti, and we'll be starting our session with the trading methodology. So last time we covered a little more in depth on what AutoUFOs are. Today I want to show you how you can implement that through the market climate as well. So to trade, we could use the AutoUFOs like I had mentioned last time, but we want to be respectful of the bigger time frames. So whenever we're looking into a time frame that we want to trade, instead of us being tunneled into this one time frame, we want to make sure that we're looking at something higher than the time frame we're currently trading, and that'll help us give a bigger picture of what's happening in the market, and we can pose ourselves in line with that bigger picture while trading in our smaller time frames. So these larger time frames are going to be well known and easily accessible to the crowd, or most traders out there in any trading platform are able to access these time frames. That way we know as many eyeballs are looking at exactly what we want in order for us to pose ourselves in trades that are higher in probability. So I've listed here a few of these common time frames, and below them I've listed the trading time frames that we can use in pair with those larger time frames. So if we're trading the 15-minute time frame as our larger time frame, then we'll trade our 5-minute time frame for a trading time frame, and the 60 with a 10, and so on, so forth. You can always play with these. These aren't set in stone, but just get comfortable with what you believe is good. Just make sure that you are using a larger time frame in conjunction with your smaller time frame for the trading time frame. Let me introduce here a quick terminology that we use. So we have what's called the common time frame, are these larger time frames that we use. So whenever we're referring to a common time frame and we're trading, we're referring to our bigger picture time frame as reference. So we use this bigger picture time frame, also known as the common time frame, to select the trading opportunities that have the highest probabilities of being successful. We know that trading markets tend to continue to stay in the trend, and so we want to use that to our advantage. And we want new orders to come in as we are placing our order in that'll help push price in our direction, because we know that many traders are looking at those time frames, especially the bigger banks and et cetera, who have algorithms that look at the price of the trend lines and et cetera, and use that as entry points for their own trades. So we want to use a couple indicators. Again, we're all about keeping things mechanical, so we'll use two indicators to help us understand what the bigger picture trend is, and those would be the exponential moving average or the directional movement index. So both of these are available in a lot of platforms, including TradingView, which I'll go over with you guys right now. So I set up our trading platform here in the last couple of videos. Today I'm just showing two, which will be our main trading time frame on the top, and at the bottom is going to be a common time frame. Of course, you could use the four that I was demonstrating earlier, but I want to make sure you guys can see everything very clearly, so I just showed two for now. Okay, so the common time frame is where we'll be adding those two indicators, what we mentioned previously. So it was the EMA and the DMI. So I selected the bottom chart here. It's on a 15-minute time frame. And for me to add the EMA, I'll go on the top here and select indicators. I have it in favorites already, the AutoUFOs, of course, and the moving average exponential. But if you don't, you can just use the search bar here to type moving average exponential, and you can just simply click it and it'll add that to your time frame that you have to the chart you have selected. You'll do the same for the DMI, so it's written out as directional movement in TradingView, and we'll do the same. I'll star this one as well, so it's in my favorites for future uses. So I'll click it and that'll add the indicator to my bottom chart as well. So we can go ahead and close out of this to go back to our chart. And I will maximize it here so we can have a better view. So on this top portion, we have in conjunction with our candles, the EMA with a 9-length exponential. And the line is clearly seen in the chart itself. And right below is our DMI. So let's do a little bit of changing on the settings, and then we'll continue into how to use these. So first, for the EMA, we want to leave the inputs themselves as default, because again, we're looking for something that everyone else is looking at so that we can jump on board with new orders coming in. So these we want to stay as default. The style, though, because it's a little thin, I like to make it a little bit thicker, and you can do that by clicking on the left here, this colored box and the line, and on the bottom you can increase thickness. I'll just do the maximum there. If you want, you can change color. I'll just do some sort of gray here, and that's it. So now we can clearly see what the average is for the common time frame of 15 minutes. And now we want to change the settings for our DMI. So the DMI, we do want to change the style by removing first the 80X. We don't need that. And then plus DI means directional movement on the upside, and we want to keep that in. And same for the negative is directional movement on the downside. So real quick, let's change this first to be a histogram, and we'll do the same for the bottom, and I'll explain why in a bit. And finally, we want to increase the size of those candles of the histogram, so we'll make it thicker. And for this negative DMI, I will make it pink, just to stand out a little more. So what do these two indicators show us? The EMA shows us what the average trend line is for the common time frame. So on average, you can see our candle is, in this case, above our average, and then it goes below our average, etc. So you can use this to gauge on which side of the market we want to be in. For example, here we're below it, and finally we change the direction of our trend here from lower to a higher. And so we want to change our idea of the big picture from looking for selling opportunities to now looking at buying opportunities. So because the close, again, is above this average, we can bias ourselves toward buying opportunities. And the DMI is here to help us understand if the market is in a confirmed or unconfirmed environment. So for example, if we are in this uptrend, do we know that it's likely to continue this uptrend, or is it just going to be a little pump and dump? So we can look here below in our DMI, and in this case, it's closing below, and it's a confirmed environment. In other words, we are below the trend line, and our DMI is pointing to the negative downside. So it's showing that the top bar here indicates where we're likely to continue. So here we show it's negative. So these are unconfirmed environments. We could still trade these for the upside. But here, once we are in the confirmed environment, then we're definitely posed to the upside, and we can see the market just continues rallying. So we know that trending markets tend to stay trending. So we want to make sure we are in that direction of the trend, and these two will help us get there. So I'm going to minimize this window back. And now we're ready with our common time frame has everything we need, and our trading time frame, which is a 5-minute time frame here, is a setup with our AutoUFOs, and we'll be ready for our trading process, which I'll bring up in our next slide here. So what is our trading process? First, we'll check the climate. What do I mean by that? We're going to check that larger time frame, and we're going to see if we are closing above the exponential average, and if we are in a confirmed or unconfirmed environment. That way we know if it's above average and we are in a confirmed uptrend, then we will be wanting to look for green UFOs. Otherwise, if it's in a downtrend, we'll be looking for the red UFOs. This helps us filter out because we have dozens of opportunities in the UFOs, and it's unless you're planning on staying in front of the computer for a whole day and trading each UFO on its own, then you're just going to have to use some filter, and this is definitely one that'll help increase our odds. So after we know which side of the market we want to be in other words, are we going to be buyers or sellers, then we're going to find a UFO that aligns with that trend line in the common time frame. And I'll go through this example on a step-by-step with a live market right now. So hang in there if you're antsy. So then our third step is going to be deciding our target, and this can be done by using our common time frame. So we want to go to the opposing UFO side, and we're either going to go to a higher common time frame. So if we're, for example, we were in the 15-minute time frame in the NASDAQ just now that I was showing. So we want to look at the 60-minute time frame UFOs and place our target all the way up to the opposing red UFO there. But if it was an unconfirmed environment, so if the DMI and the exponential moving average were not aligned, then we would use the same common time frame that we are using earlier, which in our case, for the example, was a 15-minute time frame. So we look for the UFO there, and we set our target there. Finally, number 4, we're going to manage that trade. So this has a lot to do with personal preference, and you definitely need to have some trade rules in place before you get started. Here are a couple tips, and we can definitely go further deeper into this topic. But for now, you're going to set a safety target, which means you're going to have an extra contract or share in place with the target set the same distance from your stop up to your target, first target. That way you have a higher probability of being successful in your trades. You can use trailing stops. So as the market is going in your direction and the new UFOs are coming up, we can add, raise or move our stops up so that we can lock in profits. And finally, you want to use certain rules with how long you've been in the trade for. So if you're looking for a quick opportunity and you're doing very quick trades, it's not recommended for you to stay in the trade for a whole day. It's, for example, or even if you're in a trade and it's not going anywhere for the past 6 candles or something like that, you get out of the trade and move on to the next opportunity. So then we just reassess every time we get a new candle in our common time frame. We'll get a new idea of the big picture. And so we'll go back to step 1, check the climate, see if we're above or below that trend line, and proceed to find opportunities. So let me bring again our chart for the NASDAQ that we had before. and we'll go through the step-by-step process. I hadn't planned this out, but let's do a side-by-side here, see if this works, so that you guys can keep track of what all the steps are easily. It'll be a little hard for you guys to see, so let me try bringing the slides themselves over. There, I think that'll be a little better. Okay, so step one, we check the climate. That means we're going to look at our larger time frame, which here is our 15-minute, and we are going to see where has the previous candle. So this is the current candle on the rightmost. The previous candle is the one to the left, and has it closed above or below our EMA? And we can see it cleared. It is clearly closing above our EMA. I see a question from D-Hide. I'm just going to finish these steps and I'll come back to you, okay? So we've determined that we're closed above the EMA, and therefore we are in an uptrend. Now we want to determine if this uptrend is confirmed. In other words, is it likely to continue? And we can look at our DMI indicator. And at that same candle, we see that the DMI has the directional up movement on the upper side of this histogram. So it is likely, the movements to the upside are larger than the movements to the downside. So we can know that we are in the right side of that trade, and it's likely to continue in that direction. So now we've determined our climate. We are in an uptrend, and it's confirmed. So now we'll look for an UFO on the trading time frame. And I see here, D-Hide, you had a question on this, so hopefully I'll answer it here. If not, I'll look at it again. So here we're looking at now the 5-minute time frame, and we know we want UFOs that are going to be within the EMA price line. So looking again back down here, we see that the average is at 77, 63, and 50 cents. You can see that by looking at the top left here, or you can put your mouse over it. I prefer to just look at the top left for what the EMA exact values are. So 77, 63, and around 50 cents is where we want to make sure a UFO is, so that we can trade that UFO. I'll even write it down over here so we can keep track. So our EMA line is at 77, 64.50. Okay, so we want to try to find a UFO where it wraps around essentially this price line at 77.63. Sorry about that. Okay, so let me maximize this guy real quick. At 77.63, we don't have anything. However, because the price is all the way up at 77.76, we know that by the time it comes down to 77.63, which is around this EMA, the EMA is going to move with it, right? Because the price is lowering, it's also going to lower a slight amount. So it is possible that it will decrease all the way down to this UFO, which is 77.60.25. You'll have to keep an eye on this yourself to double check that when price comes down, it is actually the EMA has lowered down to this UFO. But for our exercise, let's imagine that the EMA, as it comes down, is actually going to be 77.60. That means that we are within the EMA line, and this UFO falls in that line as well. So this will increase our odds of getting a long trade, continue its long trade, because it's bouncing off of that moving average. So I'm going to mark it real quick here so that we can keep track of it. And if I can just find the rectangle, there it is. So this would be the area in which we're going to come in. So we would put our entry at 77.60.50 and then go below it with a stop at 77.56-ish. Again, the exact line is something we usually go one tick below. So let's be precise for this example. So we'll put our stop at 77.50 cents for our stop. So step 3 says, let's look at the opposing UFO for our target on the common time frame. Okay, so going back here to the common time frame, you can see it already kept track of where we're coming in. And now, because we are, again, in a confirmed environment in an uptrend, we'll go ahead and look at one higher time frame of the common, which will be, in our case, the 60-minute time frame. So go into the 1 hour. We'll increase this like this, and let's add now the indicator for their auto UFO. And it's loading. Okay. So it is loaded, and I don't see anything for a very long time, which is all the way up to 79.87. So this could be our target. It is very optimistic in my opinion. So either you set that target there and you let it run, or ideally you would manage this trade as it's going up if it's going your way, and you'll add moving that stop line up as new lower time frame UFOs come in, just to protect your money as you're going up. So that would be again, I already got ahead of myself. That would be your step 4. So you just wait. Let me go back here, because I know this is one thing that I was never clear on when I first started trading, is that you don't want to jump the gun. So we have determined that we'll be buyers at this price point of 77.60, because that's where we believe the exponential moving average is going to be. So we don't start trading this market right off the bat. So we don't just place an order at current price and hope that it will go up because it's an uptrend. We are very mechanical traders, and we want to be patient as well. So we just wait for market to drop down to our price of 77.60. And at that point, we'll become buyers. Not before and not after. We want to make sure we're very precise and very patient with our entries. And if the price never does come down, well, that's just the nature of our market, nature of trading. You stay patient and you look for the next trading opportunity, because as it goes up, new UFOs are going to be forming, new trends are going to be forming as well, new closes, new trend lines. So don't be discouraged by the fact that you might miss a trade or that you lost the trade. The market's always open, and we're always ready to trade mechanically without getting emotionally involved. So that comes back to our step 5 here. So every close of the common time frame candle, we want to double check what our climate is and find new opportunities in line with the EMA. So I'm in a 15-minute time frame. It is currently 4:23 here. So at 4:30 p.m. at my time, in 7 minutes, we'll have a new close, and we'll double check if the close is above this EMA and what is the DMI and so on and so forth. And we just keep trading mechanically and put the odds always in our favor by staying in line with the trend and putting our orders where we believe there's the highest concentration of UFOs or unfilled orders. So that's our trading process. Tomorrow, I have a special session where I'll be covering how you can practice this using TradingView. It's a very, very important session because it also, I'll touch in very important topics like how to use the TradingView for setting your calibration and how to gain confidence in the markets that you're trading and confidence in the indicator that you're using. So make sure you tune in tomorrow at the same time. We'll start at 4 p.m. At 4 p.m. Pacific time or 7 p.m. Eastern time, US. And hopefully all of this will sink in, because you'll have to mechanically go through every single step here that we mentioned before and practice this, because that's really how you gain the confidence that you need in order to not make emotional mistakes whenever you're trading yourself. D-Hyde, did I ever answer your question on number 2 here? I saw that you had a question about how we are lined up, and that's a good point. So we want to make sure that we're at that EMA line. There are certain markets that we could be a little bit off, but definitely try your best to stay in line. In other words, that your UFO is on that line itself for the EMA. D-Hyde, I think you meant to include a qualifying word in the sentence that was left out. Either if I was trying to speak and I couldn't find the word, then you're probably right. It's always hard to come up on the fly and find the right word. So if that's the case, thanks for helping out. If there are any more questions after this session, you can easily reach me from my email, which is bb@tradewithufos.com. You can come also and email our reach line, which is reach@tradewithufos.com, and they'll help you as well. If you're interested in our indicator, which is the AutoUFOs app that I demonstrated on the top portion of our charts, which show us where the buy and sell unfold orders are likely to be concentrated, you can go at www.tradewithufos.com/bb. We'll be getting together again tomorrow at 7 p.m. Eastern Time. Make sure you come to that session. It's going to be a very important one. You're going to want to review it and practice it yourself, because it's very important in your trading methodology, especially in your confidence. So make sure you attend that one. And finally, we have a Discord group. We're growing slowly. So if you haven't joined us yet, just go ahead and look at the bottom of this video once we're done, and it'll have a link to a Discord group where we can communicate either with new trades that we have, questions that we may have with our trades, or methodology, anything you want. We want to grow as a community and help each other out as much as possible. So thank you everyone for joining us today. This one was a little bit of a longer one, but it's a very important one, because we need to stick every time to our rules. And tomorrow we're going to be starting practice that. So get your thinking brains ready, and we'll see you then. Thank you, everyone. Have a good day.